We're live. What's going on, everyone? Today we are covering, or tonight I should say, I'm going to start off a little discussion of what I see on Twitter a lot, which is, should you be trading versus the Bitcoin value? Should you be trading versus the USD value? This is probably one of the hardest things for those that are just getting into this space, or for relatively new people to kind of grasp, is the difference between trading versus a Bitcoin value, the difference between trading versus a Bitcoin value, why that matters. And when you think about it, every exchange account is denominated in Bitcoin, and a lot of different things at play. I'm going to give a shout out to everyone that's in here, and then we can break into, I have a couple of threads that have covered this. So have some people that have been in the game a lot longer than I have, not so fast, and Carter Thomas actually has a really good video on this too. There's so many guys that answer this for you guys, and I think it's really important. It's one of those concepts and one of those lessons that I've worked with so many people on, and once they get that, they realize the opportunity cost. They start managing their investments better. They start managing risk better, and in the end, they end up with more Bitcoin. And what that means is, by the end of the video, I hope you'll understand this, that also means more US dollars, or whatever currency you want at the end. I'm going to make sure the stream's still coming through. If you guys can throw some stuff in the live chat so I can make sure this is coming through. What's up, Skeptic, Rion, JR, Robert, what's going on? Crypto Chronic, Jeff, a lot of guys in here. Cool. It's frozen on my screen, but it looks like it should. Okay, it's working again. Nice. What's going on, AD? Jesus is in here. What's going on? Joel, more money, more Bitcoin. Yeah, exactly. So I'm going to break right into it, guys. We have the Bitcoin chart on my screen. Skeptic's in here. It is on. What's up, Dayon? I'm gonna break right into this, guys. It is probably, it's not really a debate. It's not a discussion. It's the only thing to think about if you are a trader, if you are trading, and that's trading against the Bitcoin. And I think after one or two very short, very quick examples, you will understand why. And you'll understand that more Bitcoin means more USD, or more Australian dollars, or more Mexican pesos, whatever currency you want. More Bitcoin is what that leads to. So first example I'll go over, guys. This is a really easy one, and it's I think it's even more pertinent as Bitcoin is kind of at that all-time high. I saw this question arise tonight because people were kind of saying, should you still be trying to accumulate Bitcoin even when Bitcoin's this high? Or when Bitcoin's a volatile asset, should you be trying to acquire more of it instead of acquiring more USD? And yes, and that's only because of the structure of the current crypto market. Maybe in a few years it'll be different. Maybe there'll be USD pairs for every altcoin. Right now there's not. Right now every exchange is denominated in Bitcoin, Bittrex, Poloniex, all those are. Unless you're trading on Coinbase. If you're trading on Coinbase, then yeah, trade against the US dollars, focus on the US dollar value of your account. But if you are, if you're trading, or if you want to trade, or considering trading, or auditing your trading strategy, you need to compare yourself versus Bitcoin. And this short example will show you why very quick. So even if you don't fully grasp this yet, by the end of the video, you will. So really easy lesson. And I made this back when Bitcoin was 5,000 bucks. So it applied then, it applies now, it'll apply at 100K. So convert your 5,000 USD to buy one Bitcoin. You convert your one Bitcoin to buy two alts. We'll call them Doge coins, priced at 0.5 Bitcoin each. It gives you two alts, total of one Bitcoin. That means they're priced at 2,500 US dollars according to the current price. So just listen to this scenario. The positive news comes out about Bitcoin. Let's say it's Bitcoin futures news, and Bitcoin dollar value rises. It rises from 5 to 6K. It's a 20% increase in the Bitcoin price. No news comes out about your alt. Nothing has changed about your altcoin. It's still holding the same USD value. The price of your alt in Bitcoin falls 20% to account for increased strength. A lot of you guys see this, and you're seeing it right now, and you saw it in October. And whenever Bitcoin rises, you see that alt price get suppressed. The new price is around 0.416 Bitcoin per Doge. The price of your alt in USD is the exact same as before, still 2,500 bucks. Now, let's say you don't even panic sell. Let's just say you're looking at your account now. You're on Bittrex. Now you have two Doge coins, and they total 0.832 Bitcoin. Bitcoin's highly volatile. Let's say it's at the top. Let's say it's at the bottom. It doesn't matter. You have 0.832 Bitcoin that's worth 5K. You have the same USD value. You have less Bitcoin. When you want to cash out, you had 1 Bitcoin at the beginning. You now have 0.832 Bitcoin. You sell those alts back into Bitcoin. And when you cash out, you are only cashing out 0.832 Bitcoin instead of 1 Bitcoin, guys. You lost money. You didn't lose money. I mean, Bitcoin could have gone up so much that it actually, brought your alt USD value up. And then at the end, eventually you have to sell that alt and buy the Bitcoin back. Right now, the only funnel, the only off-ramp for that Bitcoin for any coin is Bitcoin. Unless you're, there's a few outliers there with ETH and Litecoin and a few others on Coinbase. But if you're trading any alt, you have to move back to Bitcoin to cash out. So, the only value you're thinking about if you are trading is Bitcoin. I think it is okay to think about the USD value. But the only way that you can actually objectively rate the USD value of your investment is look at it versus Bitcoin's value, USD value change. If you invest in Bitcoin, or let's say, you have Bitcoin, you invest in an alt, you're selling your Bitcoin and you're buying an alt. Eventually you have to sell that alt, buy the Bitcoin back. So if Bitcoin rose more than your alt did, even if the alt went up in US dollar value, you shouldn't have traded. That was the opportunity cost of moving into the alt, and you lost money. You shouldn't be a trader. You're not trading. You should hold your Bitcoin. You would have more money. That's a really tough lesson for some people to learn, but you're spinning your wheels. A lot of people probably saw this from June at the peak alts. Sure, you could have bought ETH in June and held it until now. You could have put 1 Bitcoin into ETH in June and you'd have more US dollar value, but you'd have half a Bitcoin now. So when you cash out, you have less US dollars. I guess I'll go through another example though, because it was an interesting debate tonight. I think, there are some interesting kind of scenarios that people can throw out of whether, if Bitcoin goes down and whether that still matters. It 100% still matters. Even if Bitcoin crashes, that means your alt had a higher US dollar return than Bitcoin. So yes, you made more US dollars there by focusing actually on the Bitcoin price. You just didn't even kind of realize that. So one more thing, I made this thread, and then I have one more example is kind of this exposure thing. So this is something that a lot of crypto traders don't realize. I know this is the first market a lot of people are trading. A lot of FX traders understand this, or they usually don't when they get into it. But after a little bit, I had this conversation probably 10,000 times. When you're making a currency transaction, whether it's an FX, whether it's in crypto, there's 2 transactions happening. So suppose you are buying Doge. What you're doing to buy Doge, you have to sell your Bitcoin to buy that Doge. So eventually, to long the Doge, you have to short Bitcoin. So eventually, if you want to, convert to US dollars, if you're looking at the US dollar balance, you have to hope that your Doge is higher in Bitcoin, in the Bitcoin value. If it's not, when you convert it back, it means you're selling your Doge and buying a more expensive Bitcoin, and you're getting less US dollars. So you shouldn't have been trading once again. There's an interesting comment. Bitlord had an interesting comment. He has some good periscopes. Definitely check him out. He had an interesting comment though about, what about if Bitcoin goes up and you should only be, you shouldn't be looking at volatile assets. You should only be considering US dollars. If Bitcoin's going up and that's what you're scared about, you can definitely, have a pure long play. So you can hedge your Bitcoin short exposure by being long Bitcoin USD equal to the amount of the current exposure. You can either do that with swaps. You can do that with futures. It's a very simple, easy strategy to implement. I have multiple threads on how to do that. And that would make you long crypto, short the US dollar. So that way, if Bitcoin or alts rose against the US dollar, your portfolio would grow. But to think about your alt in US dollar terms, it's a losing game, guys. You're going to invest in these alts and you're going to see it go up from, 10 cents to 20 cents. And if you put a Bitcoin in there and it went down in Bitcoin value, you're going to sell it out and you're going to say, oh, look, I made 10 cents per that coin. And you sell it and you get back less Bitcoin. And then a week later, when you try to cash out and you need to pay rent, and you need to, pay your car, your whatever bills you have to buy a flight, you're going to have less dollars because you have less Bitcoin. One more thread I have for you is, passive and active investing. It's something that doesn't come up. It comes up in a lot of different asset classes. And then I'm going to take questions, guys. It comes up in a lot of different asset classes. It doesn't come up in crypto too much. But the harsh reality is, you have to be looking at the Bitcoin value. If you're not, you should just be holding Bitcoin. So think about it like this. In the previous example, if you invest in that alt, goes up in US dollar value, but you have less Bitcoin, what is the opportunity cost of making that play? You shouldn't have made the play. You should just be a passive investor. You should just be holding Bitcoin. If you're not earning more Bitcoin, then you're earning less Bitcoin, and you should just be holding. Less Bitcoin means less US dollars. Whether Bitcoin's going up or Bitcoin's going down, it means less US dollars. It's Fullbring has a good comment. It is really tough for some guys to understand. But once you kind of think about it, and it's a little bit easier for guys that have come from FX and have traded, if you have it's whatever the account is denominated in. So if you have an FX account that's denominated in US dollars and you're trading the euro yen, or you're trading, pound Kiwi, anything, you're not thinking about the account, in pound terms. You're thinking about it in dollar terms. That's what your account is denominated in. If you're thinking about acquiring more yen in a US dollar account, it's a losing game. Anyways, guys, I hope that explains it. There's a bit of a discussion, a debate on Twitter. It's not a debate. It's not a discussion. It's a really basic concept when you kind of think about the different scenarios. Think about it when Bitcoin's at all-time high. Think about it when Bitcoin's at all-time low. Think about it when Bitcoin's up and down 30%. You have to use the volatility to your advantage. And that's what it's all about. And I have multiple threads on having a systematic timing approach to do that, about moving into alts when Bitcoin's at resistance or moving sideways. But it's all, if you're trading, you have to be looking at the Bitcoin value. And if you can't grasp that, you shouldn't be trading. You shouldn't, you're going to be losing Bitcoin. And in the long run, 3 months are going to pass. And you're going to have less Bitcoin in your account, and you're going to have less US dollars or whatever currency you transact in. So let me take a couple questions. Let me see if there's any more questions in here. Yes, Satan has a good point. He says, once you start looking at your blockfolio in Bitcoin and you see your alts in Bitcoin value and plus US dollar value, you understand. Yeah, and that's tough for people to understand. So it's kind of a joke in the community. If Bitcoin's doing really well and their alts are going down, some people will flip to the US dollar value because they can't take it. They're losing money, and they know that they should have just held into Bitcoin. They shouldn't have been trading. That's a losing trade. Even if it creates a kind of a tax, what's that called? A tax situation. But taxes aside, if you're gaining US dollar value and you're losing Bitcoin, the opportunity cost was you should have just been in Bitcoin. You would have made more money. JRS has a good point. He says, so I agree it's not necessarily a debate, but I don't see the strategy being relevant in the next year or two, especially if fiat onboarding options rise exponentially with other currencies. Thoughts? Yeah, JSR, great point. I mean, in the future, in 2 or 3 years, that's so true. And this relationship's going to change. But right now, Bitcoin is the lifeblood of the entire crypto asset space. It's liquidity for everything. So if you move into any coin, and that's why liquidity gets sucked out of these things, as Bitcoin rises. It's because all that money, all that liquidity sucks back to Bitcoin, and that's why the value of them goes down. So they get beat not only from the inverse exchange rate, but they also get beat from a liquidity standpoint. So that's why you see them really get crushed when Bitcoin goes in a run. Something that a lot of people don't think about. JSR, you're right. Once there's more onboarding, offboarding options, this kind of this relationship's going to change a bunch. But for right now, there's no debate, no discussion. It's all Bitcoin. Crypto Hunt has a question. How do you long the crypto market through BitMEX? Please let me know and I'll sign up today with your ref link. You don't need to sign up with my ref link, man, but sign up on the testnet first. I 100% would tell everyone to sign up on the testnet. And quite honestly, I would tell most of you and probably most people to not even be on BitMEX. A lot of people, if you don't have experience trading with margin or with leverage or any of that, you probably shouldn't be on there. But it is a good way to hedge away kind of that short Bitcoin exposure for being long alts and short Bitcoin. What's going on, Pat? Ian, so it's partly, so Ian has a question, guys. He said, is it basically because everyone is super bullish on Bitcoin? So even if you're not bullish on Bitcoin, so think about it like this: if Bitcoin's going down, right? You still should be trading against the Bitcoin value, because if Bitcoin's going down, that's okay, and your Doge is going up, you can't sell your Doge back to USD. You still have to convert it to the Bitcoin. So you still have to be thinking about how to earn more Bitcoin. Bitcoin is the off ramp to USD. So if you want to say, yeah, I don't want to compare my portfolio in a volatile asset, sure, compare it in US dollars. The only way to think about your portfolio in US dollars is to think about getting more Bitcoin. Mitchell has a question. What do I think about Railblocks? I don't know anything about Railblocks. I see it showed a lot. Tricera, I can't answer that. That's all I really had, guys. I'm going to keep this really short. Crypto Saran, actually one more. I'll answer one more question. I think this is a really good question. Crypto Saran says, hey, Luke, what about long-term position alt? Wouldn't you then look at long-term USD value? I understand the Bitcoin in short to medium-term trades. And that's the perfect point. So that's the one scenario. That's the one case where I think looking at US dollar value, US dollar values actually makes sense. And the reason is because, yes, in the future, there might be more, off and onboard kind of ramps for those coins. But also, I mean, you could actually still think about it in Bitcoin terms. So I actually just did a thread on this. I'll post it in the description. If you're investing, let's say you made a basket of alts in January, you made ETH, Litecoin, and Ripple, let's say, and you were looking at their US dollar value. If you look at them versus Bitcoin for the entire year from January, and we're looking at them in US dollar value, they're beating Bitcoin in US dollar value. So it's okay to look at them in US dollar value. But if you invested in those coins, let's say you made that basket in June and you look at the US dollar value, sure, they might be up in US dollar value, but they're down in Bitcoin terms. So if you, invested in those things in June, let's say you just put a bunch of money and made this long-term hold bag in June, you're down versus Bitcoin. It would have been better for you to hold Bitcoin. So, I mean, even for short-term trades, it's okay to look at the US dollar value, but you always have to compare it versus Bitcoin because Bitcoin is the opportunity cost of being in that alt. And eventually you have to move from that alt back to Bitcoin to get your cash. So that's all I got, guys. Simple concept, a little bit hard to wrap your head around or to understand when you are first getting started. But it's one of those things. If you're a trader, if you're trading in this space, that's the only thing to look at. There's no debate, no discussion, nothing at all. This is the only thing to be looking at is earning more Bitcoin. Because if you're earning less Bitcoin and your US dollar value is up, then you should just be holding Bitcoin and you'd have a higher US dollar value. That's a pretty easy one to illustrate. Thanks everyone for tuning in, guys. Tainam, Paul, all you guys. Paul, thanks for the kind words, man. Really appreciate you guys tuning in. I'm going to do some more short little videos like this. Really great way to explain concepts, and hopefully I'll have some more of my threads prepared and provide the links so you guys can read through them. But please think about this when you're trading. I know it's helped so many people out there. Because if you don't, you're going to be spinning your tires. You're going to end up with less Bitcoin. You're going to end up with less dollars. So I'll be on Twitter a little bit more, and then I'm signing off. Yeah, Bitcoin at all-time highs, guys. That Bitcoin's even more valuable. This is even more important to understand. Thanks for tuning in. Keep earning that Bitcoin, not the US dollar. Keep earning that Bitcoin. Leads to more dollars. Thanks, guys.